Hi everyone, I hope you're all doing well, and today I'm going to be covering 3 Chinese companies to buy, and this is kind of a video just to suggest some Chinese companies to have a look into. On this list I won't be mentioning JD or Alibaba just because I talk about them so much already and I want to kind of give some new stocks out there. So even though I'm a big fan of JD, I think I'm up about 220% on JD.com right now. And also I'm up about 50% on Alibaba. I just talk about them so much, I want to kind of give some new stocks out there. So I'm going to be talking about these 3 stocks, and there's actually one of them that I am considering buying. If I do buy it, I'll probably make a video about it. If there's any of these stocks that you want me to do in a bit more detail, I can do. There was a few stocks also that were really close to making this video that didn't make it. But yeah, I am considering buying one of them, but if I do buy them, I'll probably make a video saying that I did buy them at some point. But like in general, I think there's a lot of growth in the Chinese economy. The only risk that come with it is that obviously the US hates China at the moment, so you're gonna have a little bit of pressure there. The media hates China, so you're gonna have that as well. So just be a little bit careful that they could be a bit volatile in the next few months because of the tension between the US and China. But generally overall, like some of these are pretty decent companies. So I'll go through these 3 companies that I picked right now. So number 1 is a company called Pinduoduo, and basically this is a e-commerce play, very much in terms of JD.com, Alibaba, another one of those competitors, and it's the 3rd biggest. And it basically sells things individually like the other 2 platforms, but the unique thing about this is that it tries and gets people sharing these products. So what it does is, if there's a product for sale, it'll basically offer a deal that if that person can get 10 of their friends to buy this item, they're able to get it cheaper. If they can get that, them 10 people together to buy this item in 24 hours, and then if it doesn't, they refund the money back to them. But the whole aim is to try and get products shared out to friends that more buy it, so it gets more sales and kind of that interaction and getting people on the platform. So it's a bit of a neat little business model it's got going on there. I like the idea behind it, and obviously I'm a big fan of e-commerce platforms, and this is the 3rd one, so maybe I can own the first biggest platform, the 2nd and the 3rd biggest platform. But yeah, it's listed on the Nasdaq under the ticker symbol PDD. And the really annoying thing is that it IPO'd about 2 years ago, in about 2018, and it was pretty much flat for like a good kind of 2 years. And someone actually told me about this stock in about March time and said, go look at this company. And I looked at it and I was like, oh, this is really good, but I never went anywhere with it, which is kind of annoying because then it went from like being like a $30-$40 stock and all the way up to like a $88-$90 stock now. So it has pretty much doubled in like over 3 months, and I'm like, damn, I should have looked into that one a bit more. And yeah, it does look like a great platform. So the other thing really put me off is just the amazing run that it has been on recently. But yeah, when you get stuck into the company, you'll actually see that it kind of justifies the valuation that it is on right now. So when we look at the earnings and the revenue growth of this company, it's a company that has been historically unprofitable, but it is looking to make profit within the next 1 to 2 years. And then just like very much like how JD.com was really, and when it does make profit, it is set to shoot up quite a bit. It's going to have earnings pretty much doubling every kind of year. Revenue wise is just going to be a stupid amount of growth as well. So yeah, forecast wise it looks like a brilliant company. So hopefully like within them kind of like 2 years with it being unprofitable, maybe there's some little dips in this company. So yeah, I'd like to get it a little bit cheaper than what it is right now if possible. But yeah, I do like this company. It's just gone up a little bit too much, but when you look at that revenue growth, absolutely fantastic. Balance sheet wise, not too bad. Debt to equity ratio 34%. The debt has slightly there has some debt that has come on the balance sheet in 2019, The equity has slightly slumped down, but overall, that's quite a healthy debt to equity ratio. And when you look at the debt, it's 7.5 billion, and then when you look at the cash, it's 42 billion. So in theory, if it wanted to, it could probably just pay off that debt on the balance sheet. And when you go into top shareholders, I always like looking at these smaller Chinese companies, because normally some sort of company does have a stake in these companies that is either Tencent or Alibaba tends to buy, if they're a decent Chinese company, they tend to buy a stake in them, in these smaller Chinese companies. And you look, and Tencent have a 16% holding in this company, so that's a very healthy rate to be holding. So I always like seeing Alibaba or Tencent back in these smaller companies. And yeah, a 16% holding by Tencent kind of makes me feel a lot more confident overall. So yeah, I really like this company. If it was at the right price, I would be very tempted to buy. If it hadn't gone up, I would consider buying this one. But overall, Pinduoduo I will keep on my watch list and see if there is a decline in the stock price to go buy it. But yeah, I do really like the look of this company. The second one is a company called Badzoon, and basically this is a e-commerce solutions to help set up storefronts and integrate into platforms such as Alibaba. So a lot of companies that want to get into Alibaba, basically it makes it so much easier for them to get on there. Some of the customers already are Starbucks and also Nike. So that's kind of interesting that it has so many big US players that want to kind of get into these Chinese markets. And when you look at the share price overall, it was going okay in 2018. It was like a $60 stock, and then basically some of you new investors might not know this, but there was a lot of heat between China, US. There was a lot of US outlets that were pushing the slowdown of China's economy, and it led to a lot of Chinese stocks to decline. And yeah, it's kind of been it kind of went down and then back up, but then slumped back down again into 2020, and then we've kind of seen a pop from about $27 to about $32 right now. So share price at the moment is not in too bad of a position really. When we look at the P ratio, it is a 67p, so it is making profit, but like I say, you can tell that it is you are slightly playing a little bit of a premium for this one. But you can see that on the earnings and revenue growth, you can see on the earnings that they've kind of been a bit flatline, but revenue has increased. But going forward, it is forecast that earnings do start to increase by quite a lot going forward, and then revenue wise as well, you're going to see quite a jump in revenue. So the forecast side of it is actually really healthy on this company. When you look at debt to equity, I think this is probably the one thing that puts me off this company, is when you look at the balance sheet and you see the massive jump in debt in this company. Obviously the debt to equity has gone to like 90% now, so the balance sheet has took a turn for the worst. 2.3 billion in debt, and the cash is 1.7 billion, which is I would like to maybe have a bit of a cleaner balance sheet than this. It's still not a bad balance sheet, don't get me wrong. I just like maybe a bit more of a balance sheet, and the shoot up in debt kind of puts me off there. When we look at the breakdown of total shareholders, once again kind of looking for either Alibaba or Tencent to be in there, and we do have Alibaba that do hold a 14% stake in this company, which is a really good sign as well. So that also gets thumbs up there. So overall, I do like this company. I might not like it as much as Pinduoduo, but yeah, I still think it's a little decent company. I say I think it's just the share price that kind of puts the debt to equity ratio that does kind of put me off. And last up is a company called HUYA, and I hope that is how you say it. But yeah, basically this is a website very much like Twitch. So if you guys know Twitch, you'll kind of get the idea already what it is. But basically what happens is there's a lot of content created by users, and this is normally in the form of live streams, and people live stream stuff to this website. And the big thing when you think about live streaming is gaming, and obviously gaming, esports is growing absolutely huge, and this is the company in China that will really benefit from that kind of live streaming, user content, the esports growth that is currently going on. And this company is kind of, it's been IPO'd for about 2 years now, and it did shoot up to about $48 back in 2018 after its IPO, and then pretty much it's been flat really over like the last 2 years. It hasn't really done much. which is kind of interesting. P/E ratio, we've got a P/E ratio of 63, so we can see it's making profit. Once again though, you are paying a little bit of a premium for that. It did have a bit of a dip in earnings, and it wasn't profitable, but it's back to making profit again now. Revenue growth was still pretty good. Earnings, same again. It was growing a bit of a slower rate, but still overall pretty decent. And then we can see that earnings are set to do quite well going forward. Revenue wise, once again, we're going to see a decent increase in revenue, something around about the 30-20% mark. Yeah, so overall, like, the forecast is pretty good. It's not as crazy as the other two, a little bit less growth, but still a little bit decent growth in there overall. Balance sheet wise, I do like, this probably the best balance sheet really. Zero debt to equity, zero debt on the balance sheet, which is pretty good. And when you look at the cash amount as well, there's 10.3 billion in cash, so they're very healthy on the cash side of it as well. So overall, it's probably the least growth out of these two, the three companies I've done today, but it's probably got the best balance sheet. So it kind of you got two things going on there overall. And when we look at the top shareholders, once again, we have 10% holdings on this one, and they actually own 36% of this company, which is a lot bigger than the other two where we've looked at the top shareholders, which is a really good sign. Seems like Tencent really do like this company overall, so I do think that's a really positive sign. So overall, guys, those are three Chinese stocks to have a look at. I think overall, Pinduoduo, I really like that company. I would rate it as a buy, just at a bit more of a cheaper valuation. I think like the price valuation here is like price to sales ratio is about 17, so that, and it was at 8 before that jump, so it kind of says that it's gone up a bit too much. So yeah, I think that would have to pull back a little bit, but I do like that one. Badzoon, I like that one, but it's just the balance sheet that kind of puts me off. I think even Sony have actually bought a stake in that company, but yeah, I think it's a good company. I just don't know about the balance sheet side of it. And HUYA, I kind of like probably the most at the moment at where these three companies are at. I am kind of tempted to buy a little bit of a stake in that one. I'll have a think about it. It's just a little bit of a slower growth compared to the other two, but when you look at that balance sheet, very healthy. The growth of esports, I think, could be massive, especially in China as well. So I think that could potentially be one that I think about sneaking onto the portfolio. I'll have a think about it, but let me know what you think about these three companies. Let me know any Chinese companies you're looking at, guys. As always, smash that like button, subscribe if you haven't, and I'll see you in the next one.